Hello everyone, welcome to yet another weekly analysis. My name is Kelvin Iria, and on this episode of weekly analysis, we'll be talking about the dollar once again. But this time it is going to be a little bit different. There are fundamental factors playing in this time around. So just like you've seen on the thumbnail, the ceasefire may not hold, so it is going to play a considerable factor with the dollar. Now I'm going to describe what I mean by playing a considerable factor with the dollar. If you've seen the previous video, I made a detailed analysis on how it is, or what it takes to find get a right trend, you know and then trading in that direction from the lower time frames, right? But this time around, on the dollar, we are bullish. That's the fact, is we are bullish on the dollar, right? And the structure or price action, it is above you know every little tool you might have, like the support and resistance lines and whatnot. It's above those. So I need you to understand this. The dollar goes up when the dollar is strong when America is strong. If America is at war with Iran, the dollar falls. I need you to understand this contrast, right? So excuse me. Now, so it is very important to know that we were expecting the dollar to give us a daily time frame retest into this level. This was the plan from the onset, right? From last week, this was the plan. Now, I also said last week that whenever you see chart patterns like so, double bottoms, at areas of interest, double tops, this is how they usually look. Let me make it detailed. Double tops like so, at areas of interest like so, they indicate a reversal. Nine times out of ten, the moment to break the neckline, you have to understand the moment to break the neckline, which is this middle part here, because underneath, with underneath like so, doesn't matter how slight it close. The moment to close underneath, body candle close, it's done for, right? Bye bye, right? Now I need you to understand this concept because it's going to be very important in the next few seconds. The dollar index tells us what's going to happen on the GBP USD and Euro USD, because we trade the GBP USD and Euro USD as proxy of the dollar. Now, for me to be able to execute without waiting for the dollar to come here and say, okay, it just might not come here and it's looking to push to the upside without doing all of that, I have to see a double bottom, or I have to see a head and shoulders, or inverse head and shoulders in this case. So, for us to look for buys for the dollar, right? We need to body close above this neckline. And when that happens, I might start looking for sales. Now this is what I'm trying to say. When we body close, it is a clear double bottom, right? I will then go to the Euro USD, because when the dollar goes up, when the dollar is rallying up to the upside, Euro USD is going to drop. You see what I'm saying to you? GBP is going to drop. But then the question is, what pair am I going to trade, in between GBP and USD? I trade the pair that is trending in the direction of the structure of the monthly time frame. I say that again. I trade the pair that is trending in the direction of the monthly time frame, because that's the pair that's that's basically, it is, I call them A plus setup, but that's the pair that's trending. If a pair is going against the structure, now this is what I'm saying. Euro USD is bearish. Market structure easy as ABCs. The moment to close above this level right here, that's when we become bullish. Simple market structure, right? But then you can anticipate that this structure is about to be broken, or we are headed back into this level. And you can see we were going up for a while. We're rallying to the upside for a while, but because the bearish structure is stronger than the push to the upside, the market tends to always follow. You see what I'm saying? It tends to always follow, market structure, and that is the advantage I always have over the market. It helps me to, one, wait, be patient. It helps me to take the right trade. It helps me to trade less. So when I execute, I know I'm executing in direction of the monthly time frame. I know I'm executing in the market structure direction of the monthly time frame. I'm not executing because I need a trade. I'm executing because it is time to trade. You see what I'm saying to you? Now, on the weekly time frame, it is as simple as ABCs. We are bearish. Oh, now we are heavily bearish as well. Created a lower low on here. We were expecting a pullback into this level, 1.15000, right here, like so. We're expecting a detailed pullback into 1.15000, but we never got it. Right, this is real USD now, right? I'll show you UPSD in a while, because that was the analysis for last week. But like I said in the beginning, The chart patterns will make sense by the time I show you this. Now, if you notice, right, we are at an area of interest like so, right, 1.1, 1.4, 0.00, 1.1 whichever you call it, right? We're at an area of interest, and you can always see 1.1.1, we got 1.1 for 500 right there, right? The moment to body close underneath this line, the moment to body close underneath 1.1000, the moment to body close right here, we need the candle close. That will then solidify this double top, and that will then give us an anticipation for what a reversal. We are traders, we anticipate, right? We take proper risk over anticipation, and we make money over it. And then when you know an anticipation is not an anticipation when it's split out right. It's something to you. So when we get that body close to the downside, right, I would then plot my counter trend line like so on the weeks. It took me like a year to learn my lessons. Plotting them on the weeks are better off than the bodies. You see what I'm saying to you? Trust me. If I tell you anything on here, it's because I have done it. It's because I took my time to fail on it. Not just because my mentor did say, oh, that probably should teach you, oh, plot it on the bodies, on the weeks, sorry. But I was like, nah, I'm going to plot it on the bodies because I felt as though that was more efficient, right? But then when you've taken losses for a year, it's something to you. I will backtest for a year. I will backtest for half a year. It's something to you. So when I come on here to tell you some things, I'm not telling you because I'm not whitewashing what someone else has said. I'm not reiterating what my mentors have said. I'm telling you from experience, from pains, from losses. It's what I'm saying to you. I speak of experiences. You need to understand that. Now moving forward, GBPUSD, right? GBPUSD was the pair for last week, right? And we are spot on. It is one. Listen, I'll give you an instance. Right? It is one thing for you to be able to predict the direction, right? And it is one thing for you to be able to trade off of that direction, right? Most people are able to predict the direction and not take a trade like what we did this week. We're not able to take a trade because at every areas of interest, the areas of interest we had in mind, we never retested it, right? We never retested this area of interest, but the market went up, right? We never also retested it. We didn't touch it. Listen, I am a precise trader because I have taken losses over these things time and time. This is my fourth year. See what I'm saying to you? I've taken losses over these things time and time again. So they're not new to me. I needed to touch it. It's not look, it was close, right? I needed to touch it because the markets are precise. The markets are not if if you see where the week ended, right? It ended at a 1.33812. But for the markets to move in the direction we need it to move, it has to come down all the way to 1.337 or 1.33800. So you can see the numbers are quite, the numbers they mean a lot, right? The non-psychological they mean a lot. It's what I'm saying to you. It is a precise thing. Market price bounces off of prices, not off of your areas of interest. The market bounces off of prices. It just so happens that your area of interest is in consolidation or in confluence with the price that the market is willing to bounce off anyway. That's how trading works, right? Moving forward. Now, this is what we're expecting: a pullback, a push, a pullback, a push. The push happened without the pullback. Fine, no problem. But the market seem to be at another area of interest, and then we could be expecting a push to the downside. Now, this is where the DXY comes in. The DXY gives us the roadmap. The DXY tells us what we should expect, what's about to happen. If peradventure by next week we body close above this neckline, I don't need to see anything else. Once we body close above the neckline, I am going to look for buys. Sorry, for sales on the EUR We trade, like I said before, you may be asking why are we trading? Why are we trading EUR Why are we not trading GBP this time around? Because we trade the pairs that are moving in the direction of the monthly time frame. The monthly time frame, the structure of price action tells us higher highs and higher lows. You break the last structure, you're bearish. It's something to do. So if the monthly time frame tells us that we are bullish, higher highs and higher lows, I go on to the weekly time frame and the daily time frame to trade in that direction. So we have two pairs. Or I trade two pairs at most. I trade EUR and I trade GBP That's all I trade. If you think I'm not going to show to you. Right? This is all I trade. It's something to you. These other ones I watch them because I like to, I am an all-round financial analyst. I am not a forex trader, none of that. I am a technical analyst. I am a financial trader. So you see bonds, you see stocks on here. I'm following the 10-year yield. Something to use 4% right now. I trade stocks. These stocks are not just. I see. Like I said before. I trade everything, meaning, and I know what to look for. Right now, As a trader, your first now I'm talking about stocks, right? But let me tell you my thought process. As a trader, your first thought should be, what is the trend? America right now, the world right now is heading to AI. So you then go onto the charts, you then go on the internet, and then you look for the components that make AI, semiconductors, power plants. You see what I'm saying to you? Electricity, water, because you need cooling for the for data centers, right? You need cooling for the servers. These are the little things these are the components that make up AI. You see what I'm saying to you? So you go invest in those companies, TSMCs. You don't invest in the Nvidias. No, those are mega caps. You want to invest in the Palantir. You want to invest in the companies with $100 billion, $100 billion, market cap, $20 billion market cap, $2 billion market cap. Never go for the penny stocks. High risk, the reward is not worth it, right? You don't learn anything from those, right? So these are my thought process. So when I come on here to teach, trust me, I'm talking from experience. Now for this week, we are looking at the dollar index, not the Euro USD, not the USD USD. Our first criteria for entry is a double bottom, is a body close above here. When that happens, I then go to the Euro USD to look for trades. You see what I'm saying to you? I then will go to the Euro USD to look for trades, to the downside. But first of all, my criteria for execution on Euro USD is a break of neckline to form a double bottom to give us an anticipation for a reversal on the dollar index. I cannot sound this enough. It is a plan, it is on my journal, and this is how I trade. It's something to you may trade however you want to do it. But if I say this is how I do it, and I'm confident in it, and you can see my analysis there, if you, I need to go 8 months into my analysis, go look 8 months, go look at my card JPYs, right? If you did last year or last 2 years ago or something, card JPY, you see that I was spot on because I was trading in the direction of the monthly time frame. Card JPY was just selling, and I kept shorting, right? So that's all for this week. Liking and saying, listen, I'm not a YouTuber. That's what I'm saying to you. It's not ego or anything, but I'm not one for this internet thing. I don't even have an Instagram account, none of that, right? But I would say this, like and like and subscribe. I guess they say you have to say it to get subscribers nowadays. I don't really know. I don't really care. As long as people watch and learn, I don't really care about the subscriber count. No, I don't care about none of that. But they say if you want to move forward, the algorithm has to accept you or whatever. So like and subscribe. It's something to leave a comment. If you find my analysis wrong, I urge you to leave a comment and tell me why. So I can learn, so you can learn. It's simple. We make money off of lessons, not of just trading. We make money off of lessons. So have a great week. Ciao, ciao.